hear me just fine? Give me a second here while I turn on the screen recording here, screen sharing as well. One moment. All right, let's get this thing started. Okay. All right, you guys are able to see my screen as well. Now remember on your screens you have two sections. You have a chat box and a Q&A box. Please be sure to use the chat box so me and everyone can see your messages at the same time, and that way we can all stay on the same page. Yeah, so all good? Shall we get started? All right, so welcome to the webinar, guys. Today's topic is going to be about how do you get started when it comes to trading Forex. Okay. Anyone new here for the first time that does not know me personally, Navin Prithyani, or has never been to an FXStreet webinar before? Anyone absolutely brand new? Okay, so it looks like a lot of you guys have been here before or have heard about me. So, just quick introduction. My name is Navin Prithyani, the CEO of Black Tower Investments in Hong Kong and Anticipate Don't Participate in Dubai, and senior trader at urbanforex.com. So I'm working with FX Street right here today, and we're talking about some of the topics that they wanted me to introduce to you guys about how to get started in Forex. So before we do that, let me see if I can get onto a whiteboard, actually. Let me see if I can do that here. Um, let's see if they have a whiteboard on this thing. No, there is no whiteboard on this thing. Well, give me a second. Let me see if I can find a whiteboard. There we go. Oh, they made it part of Apple. Da, 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 da. Just trying to get a whiteboard going. I think they removed the free whiteboards that were online. Okay, I'll just use a empty page, or I'll take it to my charts here real quick. Let me go into Trading View. All right. Okay, are you guys able to see my screen just fine? Okay, let me load up a layout here. Give me a second. This webinar, here we go. Okay. All right, all right. Okay, and I'll turn this into white color theme. Okay, great. So I'll use this on the side and we can draw on here. All right? Okay. All right, now a couple of things when it comes to getting started with trading. Now, how many of you guys are absolutely new? And Martini Baby, you're asking, are you buying when the crypto is down? That is the rule of thumb. You buy when things are low. Okay, you don't panic when things are low. You do the opposite. Okay, so Richard, you're saying you're new. Okay, there's a few others saying they're new. Okay, so for those of you guys who are new, can you tell me what is the first thing that probably comes to your mind? How whenever you're introduced to this world of trading, which is a very exciting world, what is the absolute first thing that comes to your mind of what do I need to do? Okay, and I'm gonna give you some ideas of what the average person generally says. I need to look for a strategy. I need to make the most money as possible. I need to do this fast, quickly, strategy, 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 strategy. Okay? I must not know what I am doing, so I need a strategy. So it all comes down to strategy over and over and over again, which is fine, which is fine. But there's one key area that is very, very important to understand is, do you understand trading? We enter the trading world to make money. That's a given, okay? I'm with you there. But we don't enter the world of trading with the knowledge of how does the whole thing work? How does the whole thing work? The common sense pieces everyone bypasses and they go straight into just tell me what to do so I can make money. So they go into doing stuff taught by people who don't know what they're doing also, and there's just becoming this big loop and circle of this lasagna that's being generated, and no one is getting anywhere. It's just becoming a big mess. Right? You guys have felt that before? Where you're just going from one strategy to the next, to the next, to the next, and you're like, what is the answer? How do I find the answer? What is the right thing to do? So let's talk about that today. Now, when it comes to trading, you have to understand the word trading does not refer to the stock market. The word trading refers to the original word of trading is one person exchanging something with another person. That is trading. But for some reason, we forget this when we come to a chart on a computer. We forget that concept. Now, let me ask all of you guys this thing as a basic fundamental question. What is your goal in trading? What's the purpose of you being here? What's the objective? Okay, what's the objective? It's to make money, right? Now, if the objective is to make money, then I want to ask you guys one thing. If the objective is to make money, then as a trader, you have this much money in your capital and you want to make money. So to make money, you're going to have multiple options. You will either buy a business, right? You will open a restaurant. Okay. This is a horrible spoon, but you get the idea. There, I'll give you a fork as well. Okay. You'll open a business, you'll open a restaurant, or you will do a retail store. Okay. Where you buy and sell merchandise. Right? These are different ways of doing business, right? Which means you're going in business for yourself. Now, if you were to open a certain business, let's say a factory, what is your goal? A very simple question I'm asking. What is your goal in there? Here, I'll make it easy. Let's go straight to the restaurant. What's your goal in the restaurant? To make a profit? Okay. Let's say you have a clothing store for the retail side of things. How do you turn a profit in that? How do you turn a profit from a clothing store? Let's say you open up a Gucci, for example. How do you turn a profit in that? Buy low, sell high. Sounds very simple. And if you ask anybody what trading is, it's at the tip of their tongue. They cannot wait to give you that advice. They're dying to say trading is buy low, sell high. You put anyone in front of a computer, they forget that. For some reason, they all forget that. So let me explain this to you. Now, here's where it becomes very unusual when it comes to a chart. Okay? Prices are coming down and down and down and down, and people are thinking, I should hit the sell button because it's going down. Okay, no one thinks of buying. But when things go like this, no one's still thinking of buying. But when things go like this, what happens? How many of you guys have heard of the word Dogecoin in the last 1 month? Bitcoin in the last year or so? Why do these words come up? Is it because they're at all-time lows and they're good prices to buy? Or has it shot up so dramatically that someone has made this kind of money on it by buying low, selling high? They've made serious money off of it. But what does that mean? When people start screaming about this, what's happening is the public start coming in and saying, for trading, what we will do is we will buy it at this price in hopes of hopefully it goes higher. Is that correct? You guys understand that logic? Now let me ask you one thing. Okay, so I'm trying to do is I use reverse psychology in a lot of my techniques when I teach. I ask you the questions and your brain will automatically answer them for you. Okay, so I use a lot of reverse psychology. So hang in there with me here. I'm not trying to, irritate you. I'm trying to ask you the questions to get you to that answer that you need to on your own, rather than someone always breathing down your neck and telling you this is how it is, this is how it's supposed to be done. End of story. Like you need to know why anything happens. Okay? Now, let me ask you this. Now, you're a intelligent investor. Okay, this is all of you guys here in this room, the intelligent investor. And here's a complete noob. Okay, complete new person. Okay, we're gonna give him a funky hat because he's gangster. He's a new kid, and he's just like, I don't know anything. I just want to make a lot of money because I don't want to live in my parents' basement. You are the smart investor. I'm going to give you a funky hat. You're the smart investor. Like, I've been around. I know what I'm doing. It's been ages since I'm doing this. I understand how the markets work. So, markets are coming down and down and down and down. And you see this as, hmm, that's a good deal. That's a good deal. I like the level it's at. It's at a decent price range. You've done your research. Okay. And without going into strategy, what that research is, I'm simply saying you've done whatever research you had to do and saying that's a good price. That's a good low price. I will buy. So you buy. What do you think the newbie is thinking at this stage? What's on his mind? You kidding me? I'm not buying that. Look how low it is. I'm not going to buy a deadbeat thing that's dropping. No way. Right? I'm not gonna touch that thing. No way. I'm Don't bet on a dying horse. They'll come up with all kinds of quotes and stuff, right? No way I'm gonna buy that. Now here's what happens next. Prices start to linger around. This guy, all of you guys are like, add, add size, buy more, because it's a good deal. Prices come down a little bit more, and you're like, buy more, buy more. It's a discount, buy more. While this guy says, see, I told you this is bad. He's more of the Mr. Obvious kind of guy, right? No planning, no research, no nothing. Okay, this is I'm showing the two sides of the markets. Now the prices start to rise. The initial stage rises a bit, very aggressively. And this guy right now is like, huh, I guess it is going up a little bit. But not sure. It's been going down for like 3 months. I don't think it's going to go up. It's probably just going to come back down anyways. So he's still in confusion and in doubt. Well, you are thinking, all right, the money has started. What I'm going to do is I'm going to remove a little bit of my profits. And as you remove the profits, the prices drop a little bit because you're no longer holding a very large size anymore. So prices come down a little bit. As prices come down and the sellers start to say, whoever was selling, they might stop selling. They're like, you know what? Hold on to my positions. Looks like it's going back up. This causes prices to continue to rise as more buyers pile in. Prices rise further up here, and now they've reached this price. What happens to you right now? It's reaching a price where it started to drop from earlier. What goes on in your mind? Can you tell me? As an intelligent investor. You are now looking to remove more profits. Okay? You're looking to remove more profits. But at this stage, what happens is now the TV, Instagram, all the news channels are now talking about whatever this is. They're talking about how much money this guy made. This makes this new guy is saying, I want to do that. Let me buy it. Can you tell me who is he buying from? At that stage, who is he buying from? You. As you're dumping it, he's buying it. As you're dumping it, he's buying it. He's taking your risk. But you're already cashing out. And he's just getting in. Do you understand the difference between the logic is so simple of how any business works, buy low, sell high, but when it comes to trading, because of our pure mentality of how we think things should be, it stops us from thinking in the right way. So far, so good? You guys with me? Okay, no, anyone confused at this stage? Okay, I'm gonna take this further now. Ready? You guys have all heard of indicators and stuff? Okay, you guys have all heard of indicators? Now, if you have a moving average, which is one of the indicators, or a MACD, MACD, or a stochastics, or Bollinger Band, they will all at this stage be pointing down, right? People only buy when they start pointing up, but they cannot point up until the price goes up. They will never go first. That never happens. That's why it's labeled as a lagging indicator. There is no leading indicator. There's no such thing because they're made to understand what price does and try to mimic it. Does that make sense? So as the prices are going down, all your indicators and your moving averages are starting to go down. As prices go back up, your moving averages go back up. But what you don't understand is the intelligent investor, by the time the prices are going, the moving average is going up, the intelligent investor might be already looking to book some of his profits while the average public is just getting started. So, whatever technique or strategy you might learn, you cannot get away from the basic concepts of trading. It will end up being wrong. Every once in a while, it will be right and it will look like, oh man, I wish I can just trade all day long because it makes good money. But you cannot do that on the next trade, or the next trade, or the next trade. That consistency is always going to be lagging. Because the general concepts of how does this whole thing work is not solid in a person's mind. Is all of this stuff making sense? Right? It's basically you buying an apple from a wholesaler, right? You're buying an apple from a wholesaler and he's selling you for 10 cents. You can then sell it at your nearby Whole Foods or whatever. You can sell it to them for $2.50 as Whole Food does, right? So you can buy it wholesale and you can sell it retail. That's the whole point. That's how you generate money, right? You cannot make money saying, I will buy it when it's super, super high and then I will sell it at $2.60. That's a very tough market to play in. Very, very tough market to play in. Does that make sense? All right, now, all right, let me ask you this. Okay? Let's take it further a little bit. Let's take it further a bit. So trading is nothing but money going from one place to the next. So what an average individual sees as an opportunity, you have to ask yourself, is it an opportunity or am I just, there's a famous word called chasing it. Am I just chasing it? So I'm going to give you a little few tools, tips and tricks and hacks. Okay, this is going to help your life a lot, a lot, a lot. I promise you, it will help you a lot. Okay, so take notes if you have to. The whole thing is recorded, and understand one thing as we go here. If you see a market overall in a uptrend, Okay, let's say you're looking at the S&P 500, or you're looking at Bitcoin, or you're looking at Euro USD. Whatever your asset class is, right? Okay, whatever you do, whatever you do. And you see for this entire year, January to May, the prices have been rising, 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 rising. And you're like, well, I don't want to get involved in the rise. I know I was looking at it here and now it's here. Oh man, I should have bought it. Never think like that. Never think like that. Let it go up. That's okay. What you need to understand as a trader is not the price. The price doesn't matter. What matters is discount, and then you know the value of this item is this direction. This is a discount, and this is a future potential back to its value. Does that make sense? Now, what an investor does, an investor is completely different. An investor, he is stuck to price. He has to look at the price because his goal is to buy at the lowest price possible and sell at the highest price possible. Like investing in Amazon now versus investing in Amazon, let's say 10 years ago. Which one is better? It would be 10 years ago. Investing in Google now versus investing in Google 10 years ago. Obviously 10 years ago. Investing in Tesla now versus investing in Tesla 5 years ago. It'll be 5 years ago. So as an investor, price is important. But as a trader, you're not looking for that hold. Okay? You're not looking for that hold. You're not looking to see, I'm going to get in on this buy and I'm going to hold it until it reaches this price. You're not looking for that. As a trader, what you're doing constantly is you're looking for a deal. You're looking for a deal. You're seeing something like this saying, I understand the flow is up. And when you see a pullback start to come in, when people start panicking, you understand this is a discount because the value is this way. And anything that you start buying off of these areas, you're looking to cash out around these areas. That's what a trader does. Now, if this is $200 and you take it back up to $400, does it matter if it's 200 and 400? Can it be $1 and $4? Can it be 2,000 and 4,000? It doesn't matter the numbers, right? You know this is discounted, this is the value, this is the return to value. Money. Money made. Now, how much money is made in that? It depends on how much you invest in that. Okay? That's like any other business. If you have a blueprint on how to print the money, then it's just a matter of how much ink you put in it, and you can print all day long. Okay? That's basically scaling up from there. That's the whole concept of you getting into business for yourself, is to understand what works, what doesn't work, and the stuff that works, size it up. That's the whole point of trading, right? You're not getting into trading to replace a $2,000 job to make $2,000. What's the point of that? You're in it to learn a technique where if done well, if you understand it well, why 2,000? Why not 20? Why not 200? Why not 2 million? Because that will become a legitimate question as you get better and better. Why not more? Right? So it is a very exciting field because it opens up your ceiling compared to corporations where you have a ceiling always above you. How much will you grow? 10% a year? You know, you do a really good job, your promotion gives you 5% more. So you're not going to be able to grow. You always feel there's a ceiling and you've reached your maximum promotions or whatnot, and that's it. What now? But in trading, you can open that up. Now, there's also an element of risk that's involved with each trade. Okay, so one of the things that you want to do always when you see the prices going up and the prices coming down and the prices rolling over, whether it goes for a buy or comes down lower and then it goes for a buy, you always want to start doing one thing. if you see a top coming in as it's pulling back, put a circle on that top. Okay? This is good habits to do. Put a circle on that top, and whatever you think the bottom might be as it's rolling back over back to the upside, put a circle on the bottom, and now ask yourself, if I'm going to buy this, where am I buying it? Am I closer to my bottom circle or am I closer to my upper circle? If you're closer to your upper circle, you're becoming the sucker. You're buying what the investor is going to offload to you sooner or later. You're buying late. If you're buying closer to the lower circle, you're buying with the smart money. There is a chance you're going to make money on this. Does that make sense? Now, it looks really weird because it's like, so you're telling me, Navin, I gotta buy when it looks red? Yeah, yeah. You know the candles are made red on purpose to make it look like don't do this? Did you know that? It's because red is something we're trained to know as stop, it's blood, it's danger. That's all the red signs are. So a red candle coming down is referred to our brain as danger when in actuality in trading, it's the best opportunity. Fascinating, isn't it? So you want to stay on top of these things to understand the pure logic of what is trading to begin with. And then whatever technique or strategy you might have, you can place it on top of this blueprint and be like, I don't think that strategy is right for me because that's just stupid. That's not going to work. That's impossible. And if that strategy says, okay, and then you have one MA crossover, but then the big MA needs to cross over also. And then your smaller MA needs to cross over also. Yeah, you're going to get an entry right here then. You're late. If you're late, you're dead. Does that make sense? Is it starting to click? The basic fundamental logic of how trading must be done. Right? Now, shall we get into a little bit more of the good stuff of like, okay, well, if it's pulling back, how do I know how much is a good discount and all of that stuff? Okay, because that's going to be a big question, right? What if it comes down and you're like, Naveen, it's coming down, and I thought that was a discount, so I bought it, and then it went down more. Now I'm in a loss, right? So it's like, how do I know how much is a good discount? That's where a little bit of the research needs to come in, but there are a few elements on what to do with this. Whenever the pullback is coming in, if you're a big time trader, like a big time trader, this pullback will always come with a fear in the market. Like, how many of you guys have heard of Bitcoin being a bloodbath yesterday? Where people are literally pulling their hairs out and saying, oh my goodness, what is happening? And then you hear screams like you've never heard before, right? It's because when Dogecoin was flying up to the sky, okay, when Dogecoin was flying up to the sky, people bought up in the air around 72 cents and stuff like that. I'm just gonna pull out a random chart, okay? Even if you don't understand cryptos, and you're just a Forex trader, I'm just gonna pull out a random chart, okay? Imagine this is Euro USD, even if you're in Forex. Just imagine this is Euro USD. The smart money is here, is here, is here. What do you think the smart money is doing every time it gets really high? They're going to look to cash out. But the public keep getting pulled in by saying, I want to buy here because everyone's saying it's going to go to $1 million. That lures them in. It's the profit that lures them in. But the business sense doesn't keep them at bay and saying, why would you buy it so expensive? Yes, compared to $1 million that it can become, it sounds cheap, but that's not trading. Trading is, I want to see it get cheap and then I will buy it. That's the difference between a trader and a chaser. A chaser goes with the hopes of what things can become. He's living in his mind, not in reality. So a trader, his reality is I want to see the discount come in, then I will buy, and then we'll take it back up to value if the item has value. Is this starting to make sense? So when things start to go up, do you want to be this buyer here when it comes down for a discount, or do you want to be this buyer here when everybody, your aunt, your uncle, your grandpa, your grandma, everyone starts screaming, "Oh my God, Dogecoin is the way to go. You better buy Dogecoin now, or otherwise you're gonna miss the train." Which circle do you want to be? Anyone who got in above the 55-cent price is dead. What do you think happens to them who buy from up in this point? Okay, so a new person, remember we're saying new people getting into the market? And this is why you're here, right? You're trying to learn so you're not that new person anymore. We've all been through this, right? We've all been through this. So you're that guy with that hat right now, right? You're like, yeah, baby. All right, we're gonna buy it up here because everyone says it's gonna go higher, and we don't know any better. So we're like, okay, we'll buy it up here. Fine. We get enticed, we buy it up there. What happens now? What happens when this thing starts to drop down, 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 down into this circle? What happens to us? What will we do? We're gonna sell. We're gonna sell. We have no choice. We're in so much loss, we can't handle it. And on top of that, we're confused why we're in a loss. And then we're like, can a tweet from Elon Musk really make this thing go down? I don't know what it is. I'm just gonna sell. I don't understand this. So they sell. Who do you think they sell to? Who buys that? If you sell, someone has to buy it, right? Who buys that? The same businessman who bought it last time. He's like, oh, cool. Thank you, man. I needed it on wholesale prices. Thank you very much. I'll take these wholesale prices of 25 cents, 30 cents, and I'll see if I can take it back up to 70 cents. A very subtle difference in thinking is all you need to say, all right, now give me a strategy with this blueprint in mind. And now, whatever strategy you develop or work with along these lines will suddenly start to work. It'll suddenly start to work, and you'll be like, oh, I just have to tweak my strategy a little bit. Whatever strategy you might have learned. If it doesn't fall under these blueprints, it's going to be wrong. How many of you guys have already studied strategies before in this room? Would you say there's a strategy that you generally go to or might have or currently working with one and you're trying to understand, okay, what do I do with this? How do I make the most out of it, et cetera, et cetera? Right? So this is the basics understanding of how do I know what we're dealing with? How do I know? Okay, I think Martini baby, you're saying you're an MPA student. Okay, okay, welcome, welcome. Good to see you here. All right. So far so good. Everything making sense? All right, so let's talk a little bit about the discounts. Okay? Discount on means different things on different time frames. Okay? I'm going to put HTF representing a higher time frame. A higher time frame means daily or a weekly. That's a higher time frame. Okay? Even 4 hours sometimes. So I'm going to write it here. Daily and weekly. That's a higher time frame. What that means is if I go to, let's say, a Forex pair, and I go to New Zealand USD, for example. Okay? I'm on New Zealand USD. I'm going to go to a weekly chart. Now, on a weekly chart, can you look at the current trend and tell me, is the New Zealand economy doing well against the dollar? It's doing fine, right? Now, I want you to understand one thing. On a higher time frame, now, if this has gone from here to here, what's a good discount? Is 5% a good discount? 10%, you want a pretty decent discount, right? So you want a discount that's approximately 30, 40, 50%. But when you get a 30, 40, 50%, you want to look for, okay, this is a nice area. These are all nice prices. But what's in those areas? I have a level here. Last time, price shot up from here when the price was here. This is human memory. They will remember that. They will remember that. Okay? If something was $1 that you used to buy, whatever item it is, if it was $1, let's say the apple is $1, and then price is shot up to $10, right? It shot up to $10 and then it stayed at 9, stayed at 8, stayed at 9, stayed at 8. What happens if one day the price comes down to $1? What do you think the public's going to do? Are they going to buy one piece? Are they going to buy two piece? They're going to buy as much as they can because they remembered last time it was at $1, it shot up to $10. God forbid it happens again, buy everything. Sell the house, sell the car, sell the grandma, sell everything so we can buy every damn apple on the planet because now's the time to buy. That's the same logic that applies to trading. On a chart, what that looks like is give me a good enough discount, but give me a discount to a place where there's some memory there. This is a memory area. This is a memory area. This is a memory area. Wherever it shoots up and launches from, people remember that. People remember that. So you're looking at these type of discount areas and saying, all right, I'm going to see what I can do from these areas. And you want to see how much buying comes in. How much buying comes in represents and shows on your volume as well. That's when volume comes in handy in saying, is people buying it once the price comes down into this area? Are people buying more once price comes down to this area? Okay, then you're able to balance out that, I think it's getting ready to go back up. I don't think they're going to come back down anymore for a further discount. It's going to go back up. And that's how you can start judging it. Your whole job is to judge it in this area. Never here and never here. Your whole job is to judge it down low areas. Looks like I made a smiley face, but you get the idea. You wanna judge it down in the low areas. Does that make sense? All right. Now, going back to the higher time frame stuff. On a higher time frame, what a discount is on a higher time frame, like a daily or a weekly, if I get a pullback 50%, 40%, which is in these areas, how much of a drop is that? It's from price 7,200 to price 6,600. What do you think is going to happen to the people if that kind of drop happens? What's going to happen in the market? They're going to go crazy. They're going to panic. So a discount on a higher time frame is represented equal to a panic. The same thing when the trade begins, it will be caused by a strong news event. A strong news event that can push in the panic to its limits. Okay? Now, all of you guys, I, I, I know I was gonna ask a question. All of you guys have heard of coronavirus, right? But I'm sure all of you guys know about this. It's even more famous than Bitcoin, right? So you guys have all heard of coronavirus, right? No doubt about that. Can you tell me when coronavirus started? Jerry, like, what is it? Okay, March. March of which year? March of 2020. All right, let's take a look at this. Let's take a look at this. You see this market, New Zealand, that's been coming down, coming down, coming down. And then around March of 2020, right there, it goes crazy. It just drops dramatically till here. What do you think the average person looking at that with their gangster hat is saying? They're shocked. They're like, bruh, what? No way. While you, on the other hand, with your smart hat, looks like an Amish hat, but with your smart hat, you're like, sweet, buy it. The whole world is going crazy, screaming on the top of their lungs, saying, it's the end of the world, it's the end of the world. The Mayans are here in coronavirus form. It's the end of the world, it's the end of the world. The smart guy is thinking, if it is the end of the world, what am I going to do with my money anyways? Let me at least buy things that are cheap. Intelligent. Intelligent. End of the world, end of the world. Let's buy toilet paper. A lot of it. Okay? He's in a different market, unfortunately. But this guy is like, buy everything. Buy real estate, buy stocks, buy Forex market items, buy cryptocurrency items. Buy it now. Load up. So as it comes down and down and down, things start to halt in this area and they start to rise again. Now, as it starts to rise again, what do you think bruh is doing? Bruh is still confused on, yeah, but it's coronavirus time. It'll come back down. It'll come back down. What do you think bruh is doing at this stage? It'll come back down. It'll come back down. What do you think bruh is doing at this stage? Okay, it's going up. I should buy it. Now he buys. Now he buys. What do you think the intelligent investor is doing at that stage? Now he sells. He's removing some money. You see the two differences in the psychology of it. Don't be the guy that buys 70 cents to make a profit at 71 cents. That's very, very hard and very, very dangerous. Be the guy that can buy it at 60 cents and offload at 70 cents. So when this is happening, now let me ask you a psychological question. When this happens to Mr. Bra over and over again, what happens to his psychology? What do you think he thinks is happening to him? He'll read articles, he'll say, "It's my broker. My broker hates me." He'll get depressed, he'll think he has bad luck. He'll think this game is rigged. He'll start blaming anything and everything. He'll get so down psychologically thinking I have bad luck or this is a big boy's way to steal money from poor people. But what is the real answer to the situation? What's the real answer to the situation? It's the lack of knowledge. It's the lack of understanding what you're getting involved with. Right? It's your lack of understanding of that. So what you need to do is instead of thinking, no, you don't have what it takes and feeling down about it or the market's tricking you, you need to step up. The market is like a bully. It will keep coming after you until that one day when you stand up and saying, you know what? I'm going to figure out what this bully is all about. And then I'll stand up to him. But you need to figure him out. Otherwise, he'll keep coming after you and it'll look like you'll have to avoid him whenever you see him. Because every time you come in his path, he'll hurt you. So the market is a bully. Does that make sense? Do you guys get that analogy? You gotta learn to stand up to him by understanding everything you need to know about the bully. You can't just go head on and just fight. That doesn't work. You need to understand everything you have to about it. And there is no mom, dad, and principal. Not in this. Okay? So far, so good? You guys are starting to get the general concepts and understanding of what it means to become a better trader. You have to understand what discounts are, where prices are headed, where the value is, and where can value return to. So if you, whatever said and done, one thing you always must do, okay, doesn't matter how much you know, never stop understanding that how much education is required behind any topic. Always keep learning. This is why FXstreet has a fantastic platform, so you can watch webinars from different angles and different topics. You'll see everyone's approach around it. You don't have to agree with everything, but you should still be informed to be, what do you need to know? How can you be better? So you should always stay up to date as much as you can to understand and be a better version of yourself, instead of just looking at a chart and saying up means hit the buy button, down means hit the sell button. And sometimes that works and sometimes it doesn't. You can only flip that coin so long before you get tired of it. Okay. Now, Ronald, you're saying, can fundamentals turn the market? Fundamentals in Forex is the only thing that can move the market. So, to go from here to here, to turn a down move to an up move, you need a fundamental process. After the fundamental process can start the movement, everything can become technical after that. You can use technical analysis after that. But you have to have the fundamental ground rules to move it. Okay? And now I understand fundamentals are very, very difficult. I'm not an expert in fundamentals myself, but I surround myself with people who I do believe are experts in fundamentals, and I keep them around as close as possible. Okay? But I specialize in technical analysis. But I specialize in technical analysis following the money, not technical analysis the traditional way that we read in books found in libraries, because, that's just jargon knowledge. Okay, does that make sense? So, whatever you guys can do, please use this blueprint, and whatever strategies you use, apply them to this blueprint and saying, does it make sense logically for a buy low, sell high concept, or is that strategy always getting you into the market very late? Okay? And that's where your journey will begin correctly. You will have difficulty in the beginning, but that is the correct journey to begin your path. Okay? Filippo, you're saying, can we apply these concepts even on lower time frames? Any time frame, any time frame. So on a lower time frame, a panic is not necessary. So a discount might be just price coming back to a memory area, but a panic is not necessary. On a higher time frame, a discount means panic. Panic means people are selling in a panic. That's what you need. You need them to sell so you can buy it in bulk. So that's why you'll see Warren Buffett many times when the economy is good, he sits on his cash and he says, I don't want anything. I don't care. And when people are screaming and kicking and screaming, so I live in Dubai right now. He's probably going to pick up half the properties around here. Okay. He's investing big when it comes to Dubai in this current situation. While the world is saying, don't buy anything right now. It's coronavirus time. When it's the opposite. You buy in a down market. Okay. Ronald, you're saying you mean correlation in following money? No. So following the money is trying to understand at what point is, when I say money, I mean the larger players. Because they're the only ones with money, right? The larger players, the smart investors, all of you guys with those big hats. That's the larger. This is his hand. It's not his middle finger. Sorry, that's his hand. All right. So we're looking at that to try to understand where the big money is going to get involved, and at what point do they get involved early, so we can get involved early with them as well around these areas. So this will never be me, because I don't have that kind of knowledge and the insights coming in from sources. They have access to sources which I don't. But I can get involved in these areas where I know, all right, they're launching. And I will never get involved in these areas because I know I don't want to touch that. That's like the areas where the big boys will cash out a little bit. So to understand this, first you need to understand what a discount is, what a value is, and then you get back. This journey becomes smoother and smoother and smoother. Okay? And you'll get better and better at your trading. So this is the one main thing I wanted to teach you guys today is whatever you do, whoever you learn from, whatever approach it is, even if you don't learn from us or our website, you need to understand the ground rules, the ground rules, and that ground rule is very, 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 very important. Now, yeah, thank you, FX Street. So there you have it. I'm also here as a premium speaker. So what you've seen today is information at a public webinar level. I go deeper into materials where you can ask me questions and I can answer them inside the premium webinars as well. All right, it's always a pleasure to have all of you guys here. Until next time, guys, I'm here once a month at FX Street and several times a month on YouTube. It's very good to see familiar faces, and thank you again, FX Street, for having me. Until next time, guys. Cheers. Bye for now.